monster dividend portfolio. We're going to talk about creating a portfolio where you can have passive income, where you're making tens of thousands of dollars per month without doing anything, okay? We're going to talk about how to do that. We're going to talk about buying dividend paying companies. We're going to talk about reinvesting the dividends and buying companies that increase the dividend, okay? So we're going to talk about a couple things. A portfolio of stocks that generates so much money that you can work if you choose to. Enough passive income to where if you want to work, you work. If you don't want to, you don't want to. Okay? Dividends are passive income. The only thing you have to do to get dividends is you have to do the initial work, which is purchasing the dividend. After you've purchased the dividend, collecting the dividend is passive. So there's work up front. After that, it's all passive, okay? You have to do the work up front. That's the key part there. You can get to the point where you can literally live off of the passive income and only work if you want to, okay? This is 0 to $1 million. I buy stock every single Friday, no matter what the stock market's doing. I'm showing every single stock purchase that I make, starting at $0 all the way up through $1 million. If you start at the first video, you'll see where I bought the very first stocks for this channel, okay? So for the dividends, what you want to do is you want to buy a dividend-paying company, okay? You want to have a company that pays dividends. Obviously, that kind of goes without saying. You don't want to buy a company that's not paying dividends. You're never going to collect any. Kind of goes without saying. When you do get the dividends, you want to make sure that you're reinvesting the dividends every single time you get one. So every quarter, you want to take the money, have it automatically reinvested to buy more dividends, okay? That way, every single month, you're getting more, every single quarter, you're getting more and more dividends, okay? You don't want to take the money and just take it. You're not going to grow your wealth that way. This is a long-term deal where you have to reinvest and let the money snowball over time, okay? You also want to buy companies that increase the dividends. This is important. Not just increase the dividends, but you want to make sure that they're increasing the dividends at a rate faster than inflation. If you're not beating inflation, you're losing money. You're losing purchasing power. You're not having your money work hard for you as it should. So it's got to beat inflation, okay? There's a couple mistakes that people make. Okay, sometimes they'll get tunnel vision, and what I mean by that is when they're looking for a stock, they'll get tunnel vision. They'll only see, oh, what is the yield? What is it paying this quarter? What is it paying? And they don't look at the big picture. Okay, they're not looking to see, is the company raising the dividend? Is the company raising it faster than inflation? Did the dividend actually fall? Did the company cut its dividend, or did it stop its dividend altogether? So you don't want to get tunnel vision and just look at what's the yield that it's paying right now at this moment. Okay, that's very important. A little example of that here, real quick, is AT&T. Go on historical data here. Click on that. Sorry, the internet's slow. We've lived out here for a while. They're still building some houses, but all the towers aren't really up, and some of them are up, and some of the companies haven't completely put their whatever they got to do in there. So here's an example. We got AT&T pays a 28-cent dividend, January 10th, 2025. Okay, let's go back and look here. Well, let's go back and look at. I was jumping around, loosey goosey on us. Go back there and look at January 7th, 2022. Paid 52 cents. So not only did AT&T not increase its dividend, and it didn't increase its dividend beating inflation, it cut its dividend by almost half. Definitely a red flag. That's a company you want to stay away from, okay? That's one of those that you actually want to avoid because it cut its dividend, okay? That's another mistake that people make is they get tunnel vision. They only look at what the dividend is paying at that moment, okay? A couple things you need to focus on. You need to focus on your goal. You need to set a goal and say, what is my goal? What is my long-term goal? And you need to start investing right now. A lot of people, they get analysis paralysis where they're looking for a stock, and they can never make a decision, and they never invest, and they lose. So you've got to find your stocks ASAP, start investing ASAP, and start investing at regular intervals so you can take advantage of the compounding interest, okay? There's different ways to grow your dividend portfolio. We want to get a monster portfolio, okay? We want one spitting out tens of thousands of dollars every single month, passive income, so you're just getting paid to do nothing, hang out at home, okay? So you want a steady flow of income, okay? You want to invest at regular intervals, okay? Every quarter, you can invest every month, every 2 weeks, every week. I invest every single Friday, no matter what. I'm investing every Friday. So I'm investing at regular intervals. You want to take the dividends, reinvest those dividends every time you get it so it can grow. Very important, okay? You want the dividend to grow at a faster rate than inflation, okay? Huge, huge thing. You've got to beat inflation. If you're not beating inflation, you're losing. You're losing purchasing power. Your money's not working for you. You're not maximizing your money, okay? What to look for in a dividend stock? You want to look at the company and say, okay, is the company's revenue growing? Is the top line number growing? If it's not, if it's declining, they're not taking in as much money, they're going to cut the dividend or maybe stop it altogether, right? So you've got to look at that top line number when you're evaluating your dividend stock. Is the revenue continuing to grow? If yes, then they've got a good chance that they can continue to pay your dividend and increase the dividend every year. Very important. Another thing you want to look at, number 2, is cash flow. Their free cash flow. Do they have enough cash left over? If they don't, they're going to have to cut the dividend or get rid of it completely. You want to make sure that they have enough free cash flow where they have left over to pay you your dividend, okay? I need to know, does the company have enough money to pay me? If they do, I'm on board. If not, I got to look at a different stock, okay? That's important. You want to look at the balance sheet. You want to look at the balance sheet. You want to look at 2 things on the balance sheet. Cash and debt, okay? Is their debt 10 times as much as their cash? Well, that's a problem, okay? Do they have more cash than debt? Well, that look good. If they want, they can pay off all the debt, and then the next quarter have even more money, or they can just have a nice steady flow of dividends to kick out to me every quarter. More cash than debt. Very important, okay? Dividend growth companies, have they been increasing their dividends every year in the past? And if they have, how long have they been doing it? Have they been doing it for 2 years, for 20 years, for 30 years? You know, look at Coca-Cola. They've been kicking out dividends since before I was born, and they've increased them every year. So that's an example of a company. And coverage and sustainability. You want to look at the dividend payout ratio, okay? Is it below 75%? If it is, they can cover the dividend, and it's sustainable for the future, okay? Can they pay me now, and can they pay me in the future? If I can check those boxes, that's another thing that'll make me want to buy this stock as well, okay? Very important, okay? And it's very important to diversify, okay? This is important, but you don't want to overly diversify. You don't want to say, oh, I'm going to buy 50 dividend stocks or 100. You won't be able to keep track of those stocks. If you have too many stocks, you're not going to be able to keep track of the companies to know what the companies are doing. Too much. You want to keep it simple. Initially, I would say, hey, start out with 4 or 5 dividend stocks. So that's enough stocks where you can be a little bit diversified, but you can also keep track of what's going on with the corporations to see if you want to stay invested or if you want to pull out and go into another company. I would try to hit a target of maybe 10 dividend companies. That way, you're fully diversified, not fully diversified, but you're diversified enough. But it's also 10 is enough companies to where you can still manage them and you can still keep up to date with what's going on with the company. I think that's important. Another thing is you want to focus on certain sectors, right? If the sector is performing poorly, you might not want to invest in that company if the sector is performing poorly, because over the long term, they might not be able to pay dividend, right? Or they might have to cut the dividends. You want to look at sectors that you like, not just today, but long term, right? We're long-term investors and we want to make money basically doing nothing. I'm going to show you a couple examples of some stocks here. McDonald's. I like me some McDonald's. Previous video, we talked about McDonald's. There was a couple big dips over the last 2-3 years. There were really good buying opportunities if you're buying on a regular basis. Sorry about the internet. I apologize. Believe me, it's as annoying for me as it is for you. So we can skip all the negative comments down below and we can all agree that it's terrible. Let's go on historical data here. Click on that. It's going slow and steady. It's $312.69 after hours there. Look at the dividend. Max that bad boy out. Dividends $1.77 a quarter, right? The March 3rd they paid. If you go back to September 3rd, 2024, $1.67, it went up 10%. Went up 10 cents. It went up 5.988% over the previous year. So the dividend is beating inflation. So I'm happy with that. And then I also want to look at, while we were in here, we'll check the box there, it's beating inflation. And then let's see here, is the value of the stock going up? I want the value of the stock going up as well, not just the dividend. So let's look at the value of the stock here. 5 years up 90%. I'm happy with that. So the stock value is going up and the dividend is beating inflation. Another reason is you don't want the stock to stay stagnant and not go up, right? So let's say 10, 20 years down the road, you say, you know what? I like the dividend investments. I like the passive income, but you know what? I'd like to pull some money out. Maybe I want to buy a vacation home. Maybe I want to buy a boat. Maybe the dream car that you always wanted, whatever. You want your stock value to continually to go up in addition to the dividend increasing, beating inflation. That way, down the road, you'll have more money to pull money out if you want to make one of those purchases. So you want the value of the stock to also go up. If it's staying stagnant, that's another telltale sign that they might not be able to sustain the dividend or increase the dividend beating inflation. That I can't say that enough. You want the dividend to increase beating inflation. So let's look at Coca-Cola. It's a monster company. It's been around forever, spitting out dividends forever, increasing the dividend every year forever. Not literally forever, but you know what I mean. So let's look real quick. Last 5 years up 65%. I'm fine with that for my dividend stock. Let's go in here. Coca-Cola, it pays a 51-cent quarterly dividend. I know that. 51 cents. And it was at 49 cents. So it's gone up 2 cents since November 29th, 2 cents. That's 4.081%. It's gone up, so it's beating inflation, and the value of the stock is also going up. And, they paid out a dividend longer than I've been alive, and they increased the dividends. Let's look at their competitor, Pepsi. Pepsi pays $1.36 dividend, $1.36 dividend every quarter. I do know that. Let's see here. Sorry for the internet. I apologize. In the last 5 years, it's got up 24%. If you notice, it's gone up 24% in 5 years, but it's kind of, it's at the level it was in June of 2021. That's not checking a box for me. I'm not a fan of that. But for fun, let's look at the dividend here, $1.36 a quarter. Let's go to dividends. And my bad. Let's see here. It was $1.27 February 29th, so it's gone up 9 cents, okay? That's 7.086%. So yes, it's beating inflation. It's checking that box. Pepsi's paid off a dividend forever. It's increased its dividend forever. I like the increase. It's beating inflation, but the price of the stock is actually not going up. And as of right now, that's one of those, for me personally, I would hold off on Pepsi. I would go with its competitor, Coca-Cola. Walmart. I love Walmart. First stock I ever bought in my life. I've reinvested every single dividend I've ever got from Walmart in my entire life. I've made the most money off of any stock ever in my entire life. I love Walmart. While we're waiting for it to load, Walmart is, think of what's Amazon. Amazon is just a bunch of warehouses, distribution centers, right? What's Walmart? Basically, they could be, they're distribution centers too. It's just that people go inside of them and shop inside, right? The e-commerce for Walmart, they're really making a move on that to go up. So I like Walmart for a lot of reasons. Let's look at Walmart over the last 5 years, up 134%. You're checking the box, Walmart. You're checking the box. Let's look here. Let's look at some dividend. Walmart pays a 24-cent dividend. Oops. Price. dividends, 24 cents. And on December 13th, 2024, paid 21 cents. So it went up 3 cents. So they increased their dividend by 14.28%. 14.28%, they increased their dividend. And you already saw how much it's gone up in the last 5 years. I love me some Walmart. I can't say that enough. Let's look at one more. Let's look at Home Depot. Home Depot's been having some challenges with same-store sales. The same-store sales have gone down, okay? Home Depot attributes that to their appliances. The big-ticket items have gone down as well because of the economy and this and that, whatever, for whatever reason. It's gone down. So they're thinking that if the economy can turn around and people start buying those big-ticket items, the appliances and whatnot, that their sales are going to turn around. And so I think that Home Depot is one of those where you got to pay close attention to the earnings reports. I think there's going to be a lot of value in those. Let's look at Home Depot. Oops. Well, let's look here. The dividends. They paid $2.30 a dividend. $2.30 a dividend. And that was March 13th of this year. November 27th of last year, $2.25. So a 5-cent difference, which is 2.222%. Okay, so it's increasing its dividend, but it's not beating inflation. It's not beating inflation. So it's not checking the box for me for the increasing dividend. But for fun, let's see if we can go back and look at what the price has been doing over the last couple of years. Loading the chart there. $362.73. And let's look at 5 years. Click on that bad boy. Oh, tells right there. So 90%. So it's got up 90% in 5 years. But if you look at this, I think there's value in looking at this. What was that? January of 2022, it's basically at the same price it is now. Now, I'm not happy with that. I like these big dips where you could purchase. The 90% up over 5 years, that's okay. But this huge dip, they've really got to get their same stores in line. If they can show the same store sales improving and increasing, which they've been declining, I think, over the last 8 earnings reports, then I think that would be a time to jump into Home Depot. But until then, I would hold off on Home Depot. 0 to $1 million, we're buying stock on Friday. I'll post this video and then buy stock on Friday, and then we'll post that video as well. And then we'll go from there. If you guys enjoyed the video, I'd appreciate it if you hit that like button. And if you hated the video, I'd appreciate it if you just went ahead and smashed the like video. Either way, gently tap it if you liked the video. If you hated the video, smash it. If it was informative, gentle tap. If you found no information at all, smash the crap out of that like button. And I hope you guys are doing good with your March Madness brackets. Mine's totally busted, but there's always next year. I hope you guys are having a good time with the tournament. I'll see you guys in the next video. Thank you for watching.